Welcome back to Trading 360. It's time for our 360 round. We're taking a look at Kraft Heinz. Shares are down following the fourth quarter earnings report. Want to get some insights on this report. Erin Lash is with us, Director Consumer Equity Research at Morningstar, and Rob Moskow, analyst covering food and agribusiness over at TD Cowen. Thank you both for being with us. So you noted, Erin, the CEO's the sun is setting on the CEO's time there at the helm. How are you feeling, and what did we learn really from the last earnings report? Your thoughts, Erin?
Yeah, Carlos just took over as CEO at the start of the year. But Carlos was instrumental in terms of being an architect as it relates to the current playbook that they're operating under, focused on investing more resources behind their brands, their capabilities, while also, working to extract inefficiencies from the business as a means by which to fund those investments. Obviously, volumes have been under pressure, resulting from a strained consumer. But we think that the investments that they're making behind the business are supportive of the long-term health and should drive an improving sales profile and margin trajectory going forward.
So at this point now, with a price of $34, what's your price target, Erin?
Our fair value estimate is $53 a share, so we think shares look quite attractive at current levels.
Yeah, wow, that would be a good move. Rob, your feelings on Kraft Heinz today?
Well, my target is $37, so I don't quite see the same amount of upside for Kraft Heinz. I think the challenge with this company is that by our estimates, 35% of the portfolio targets lower income consumers. And that's the segment of the market that has been pressured the most from inflation, has the biggest challenges to their disposable income, and has been forced to be much more careful at the grocery store. And what they talked about on the fourth quarter call is that's what they underestimated, is how weak that consumer would be. And as a result, the North American sales are down 3%. Their Grow platform was down -2%. They have plans to try to address that in 2024. But I too believe the company's made a lot of positive change. But at the end of the day, the portfolio is disadvantaged.
I see. Part of that is, as you said, a lot of the lower income consumers that are feeling that pressure. Erin, when you look at the portfolio here, Maxwell House, Jell-O, Capri Sun, Grey Poupon, Kool-Aid, Philadelphia cream cheese, Jell-O, and of course, ketchup. Is all this sort of right for the company? Is the mixture right for the company? Because often when I have guests on who talk about staples, they always seem to pick Mondelez.
Yeah, obviously, Mondelez plays in confectionery and snacking, low levels of private label penetration in their categories, as well as a very expansive geographic footprint around the world for Mondelez. Kraft Heinz is more focused on the domestic market. That's about 75% of their sales, and most of their categories are more center of the store and at risk, to Rob's point, in terms of trade down or trade out from a constrained consumer. That said, Kraft Heinz has selectively made pivots within their portfolio, divesting natural cheese and Planters most recently as a means by which to free up resources and focus their attention on their highest returning brands. Could they continue to do that? Absolutely. But we do think that there are still opportunities as it relates to their condiments business and some of the center store categories that they play in, and that investments to align their portfolio with consumer trends and incorporating more in the way of data and analytics to do so is advantageous and should support even modest growth going forward from a top line perspective.
Yeah, you noted that the company has been paying down debt. In addition to that, Rob declaring that 40 cents quarterly dividend. Your thoughts is, if you have Kraft Heinz at price target of $37, is there something they should be doing differently? And what would you consider a buy when it comes to other foods that you watch?
Well, I agree with Erin that I think that, to create really long-term value, Kraft Heinz would probably have to consider more divestitures down the road. There's some brands that I think are a real drag on their sales growth. In terms of my outperforms, I think if you're going to invest in a low valuation multiple food stock, I would prefer Smucker. Their multiple's been beaten down quite a bit, but it has a better growth profile because they have leadership positions in attractive categories like coffee, like pet food, and like Uncrustables, which is a double-digit grower, and more recently Hostess. And their growth rate has been relatively better than peers, and I think there's a lot of earnings growth to come from synergies from the Hostess deal.
Yeah, so the long-term value of Kraft Heinz, you both seem to be on the same page that divestitures could be in order. Rob, is there something when you think about the list, get rid of that? I mean, that should be the easy one to get rid of. If you were advising the company, what would you say?
I think Maxwell House would be top of the list. It is not a brand where they're putting a lot of resources into. There's a lot of consumer trial of more premium brands, and I just think Maxwell House is having trouble keeping up with trends.
Yeah, and Erin, what would you say they should get rid of?
I mean, coffee is, to Rob's point, is circulated quite often in terms of the Maxwell House brands. And obviously, Jell-O is another business or brand, that they have tried to reignite time and again. That has somewhat fallen flat. And so that's another area that hasn't gotten the boost that some of the other businesses and brands have from some of the reinvestments that they've made.
Yeah, and just to circle back on the Mondelez call, was that a name that you had a buy on, Erin, or anything else that you can mention a quick buy? We only have about 10 seconds left.
Yeah, we think Campbell's Soup looks cheap here on the food side as well.
Yeah. Okay, CPB, I'm writing that one down too. Erin Lash, Rob Moskow, thank you both very much for being with us. Erin Lash of Morningstar and Rob Moskow of TD Cowen, thank you very much. Good to see you both.